Hello, hello. What's going on, everybody? Good morning, good evening, good night, depending where you are in the world or when you're going to be watching this video. Welcome to a Capital Hungry Monday market analysis stream. Can I get an audio and visual check within the YouTube chat before I jump into it and before we start with the process here? We're going to be reviewing what's been going on within the financial markets, primarily looking at obviously currencies, global equities, and so forth. Reviewing the fundamentals and technicals that have taken place, as well as doing and sharing intraday trade idea analysis on gold, GJ, GBP USD, Euro USD, USD CAD, as well as the US 30 stock market index. We can see we have some live headlines here. Boris Johnson's mother just passed away. Charlotte Johnson Wall just died at the age of 79. Nothing too important, obviously. RIP to her, but that was just really came up in the last hour. Boris Johnson's mother. So Boris Johnson's gonna be sad for a bit. Anyways, how's everybody doing today? Okay, perfect. So just got some quick stream reminders on your screen there. All of your Capital Hungry resources are within the description, as well as on your screen layout and within the stream reminders there. In terms of economic events, just what we have overnight. At 2 a.m. Eastern, we have the UK jobs figures, the average earnings index, as well as the job change itself, the claim out count change. And then tomorrow morning during the New York trading session at 8:30 a.m. Eastern, the US core CPI monthly data, which is going to show us a lot more about the inflation figures within the US economy and obviously have a large impact on dollar, US equities, and gold. And then later on during the Asian session tomorrow at 10 p.m. Eastern, we have China's industrial production year over year. Some of the key fundamental points was that last week was a very interesting week where the primary theme of last week was some short-term US dollar strength and some dollar upside, which led to a large correction on anything really being traded against the dollar because of how dominant the dollar has been due to the Federal Reserve's excessive asset purchase program, where majority of financial instruments within the financial markets, whether it be commodities like oil, precious metals like gold, the stock market, housing market, real estate, properties, copper, wood, Bitcoin, oil, like I've already said, oil, currencies against the dollar, everything against the dollar, or everything has been primarily supported against by the dollar and the support of the Federal Reserve there. So whenever we have any movement on the dollar, we see that very strong correlation across the board. And that's due to the Federal Reserve's excessive asset purchase program and quantitative easing, where obviously at the start of the pandemic, they increased the US money supply tenfold, even larger than that, and propped up the financial markets with that stimulus and with that support. So a part of those asset purchases is obviously the housing market. You have the stock market through the ETFs, government bonds, corporate bonds, properties, and so much involved, from commodities, precious metals, and everything, right? So if you guys have been noticing, there's been a huge correlation with how the dollar moves, and if you really start to track the dollar movement, you can see exactly how everything is moving throughout the market. So last week we had various central bank sentiments, right? We had various central bank sentiments with discussions of tapering talks as well as inflation risks. And we also had Joe Biden discuss a plan last week to combat the Delta variant, where all of this brought some short-term US dollar strength from these lows. And what you can identify is, as the US dollar standalone, when you're looking at the dollar currency index last week, had this very aggressive upside move from 92 all the way up to 92.8. Everything against the dollar, or everything being supported by the dollar and that asset purchase program, had an equal correction. For example, the same time you guys see the US dollar from these lows have this aggressive upside move and double top and top off around 92.8, keep this in mind. That dollar bullish upside, which is obviously, we understand the US dollar is the world's reserve currency, and dollar domination has been extremely strong because of what the Federal Reserve has done over the last year and a half with that massive increase in the money supply and literally propping up the financial markets through that quantitative easing and asset purchase program. So on the intraday time frames and higher time frames, the dollar correlation when you're observing the movements is crazy. So for example, US dollar by itself from these lows and last week due to those fundamental catalysts of some various central bank speakers across different regions talking about potentially tapering and planning interest rate hikes, as well as Joe Biden bringing that short-term dollar strength as well with the COVID plan when it was initially announced to combat Delta variant. Even though it didn't bring much information, it still led to that impulsive upside move on the dollar. The same time you had this is the same time gold had a large correction from its highs and did the inverse move and is starting to double bottom after having this, right? It's the same time the US stock market did a pullback from its highs and is starting to double bottom at the previous price sensitivity area 34,600. It's the same time pairs like against the dollar such as GBP USD or Euro USD had a pullback from their intraday high points. And GU, you just saw the same thing as well. And obviously USD CAD did a bit of the inverse there, right? Where USD CAD did the exact same movement as the dollar index, having an aggressive pullback from its intraday low points. And you can see this at and it's not just that. The same time you had this dollar upside last week from September 3rd all the way from the 6th, going into obviously early into this week, you also can notice that even Bitcoin, which is against the dollar, had a very aggressive pullback from its highs. So look, dollar does this, right? And remember, world reserve currency, dollar domination. Dollar from its lows with those fundamental catalysts, aggressive upside move, then double tops and starts to fade out some of that strength. Anything that has been supported by the US dollar through this pandemic phase did the exact opposite. So when you're looking at this move, Bitcoin, gold, US stock market, oil, or any pair against the dollar did the exact flipped inverse of this move. If you were to look at this in inverse, you would look at this, right? You would expect something like this. The inverse of this move technically would be a downside move, double bottom, and starting to fade out like that. And that's what you're going to see here on Bitcoin. Downside move, catch a bit of a ground at a previous price sensitivity area, right? The inverse of the dollar move. That's what you're going to see when you come here and look at gold. Very interesting, right? So it's not that like gold's correlated with Bitcoin. It's everything is correlated against the dollar due to what the Federal Reserve did. That's where you're going to see the inverse there on gold, right? On Euro USD, you're going to see the inverse of the dollar movement, essentially, not exactly the same, but essentially. The US stock market, which we know has been propped up by that US money supply as dollar went up, it did the inverse movement. And UCAD, obviously, where the dollar is the primary in the quote, did the same movement as the dollar index. So now, the reason why I'm saying that and reiterating that is because you have to understand why that's happening. Fundamentally, it's due to the dollar domination. It's due to that monstrous asset purchase program for the last year and a half, where so much within the financial markets is being propped up by that increase in US money supply and the Federal Reserve taking that increase in money supply and literally flooding these various trading instruments and markets, whether it be the US housing market, which has been primarily propped up by obviously foreign investment, low interest rates, and of course the asset purchase program of the Feds, whether it be oil, whether it be gold, whether it be the US stock market, whether it be Bitcoin. It has all primarily been following some type of correlation to the US dollar movement. So dollar is, I'm not saying dollar is strong. I'm not saying it's dominating in that sense. I'm saying dollar, if you can understand dollar movement right now and the fundamentals behind that, once you see the correlations of all the other pairs, that correlation to use to your advantage is king. Okay, so now so does everybody understand that so far? Now, what we can still understand though is fundamentally the Federal Reserve will be very slow and steady, and they're not going to rush the tapering process. So that asset purchase program, as well as the quantitative easing and the interest rates remaining low, that's going to stay as is until maximum employment is reached within the US economy. But it's not just because of that. Remember, so much of the 1% in the institutional order flow is being in their portfolios, their financial gains is being supported by the asset purchase program, quantitative easing, and support done by the Federal Reserve. So the Federal Reserve cannot be too abrupt or too aggressive with their tapering process, right? They can't be too abrupt or too aggressive with their tapering process, and they can't rise interest rates too fast and too aggressively, because it would cause a major correction on everything against the dollar. If they were to looking to abruptly rise interest rates as well as taper off the stimulus support, the macro impact on the dollar is decreasing the supply of the dollar now and increasing the demand. Dollar value would go up and explode in value. But everything in the financial markets, which has been supported by the US dollar, like gold, all these pairs against the dollar, the stock market, they will all crash. They will all have a large correction. Do you understand what I'm saying? So the Federal Reserve cannot rush the tapering or interest rate hike process. It's not just about the financial markets. It's about what's involved in the financial markets and how much is connected within this web of the financial markets. If they abruptly raise interest rates and stop the stimulus, it's going to impact wages and jobs. It's going to impact the housing market, and the housing prices would have an aggressive drop. The stock market would drop. Everything against the dollar, such as commodities like oil, would have a correction. Every pair against the dollar would have a major correction. Because if you look at it, the same time the dollar has been, if you look at the dollar chart standalone here, right? And you look at the higher time frame movement. This is going to be a longer webinar, but this is the pandemic period where we were at a price of 103 on the dollar index, and we came all the way down to 90, having this massive meltdown in price of the dollar. Because why? Because fundamentally the dollar supply went up, but the demand went down, right? So as interest rates were cut, as quantitative easing started to happen, and the Feds to use their various monetary policy tools, you can see that the dollar supply went through the roof and the money supply went through the roof, but the demand for the dollar went extremely low. So high supply, low demand, it doesn't matter what it is, that means lower price, lower value. So during this period of time, when the Federal Reserve is increasing the supply of the dollar, what they're doing is taking all of those US dollars and propping up the financial markets. So when you see this movement on the downside from March to July on the US dollar, you're going to see that every pair against the dollar, AUD USD, GBP USD, Euro USD, the stock market, oil, gold, Bitcoin, it has all been bullish in the exact inverse of this movement. Do you understand? So when you look at this chart, if I come here and show you gold on the daily chart, and we zoom out here, from that period of time, the pandemic, gold was bullish and did the inverse of the dollar. When you come here and you look at the US stock market and you come to the daily chart, after the March 2020 crash, US stock market was bullish. When you come here and you come to look at Bitcoin after March 2020 is when it really started taking off. March 2020 period, it did the inverse movement of the dollar, went extremely bullish. When you come here and you look at oil, crude oil, after March 2020 went extremely bullish. When you come here, if we could look at the overall housing market, I don't know how to look at that here, but I forgot about it. US housing. I'm not gonna be able to find that. But anyways, Everything from the US housing market, from the US stock market, from oil, from gold, from pairs against the dollar were extremely bullish as the dollar was bearish. Why? Because the US dollar increased its money supply. The Federal Reserve took all that, and a part of their asset purchase program to support the economy, they go buy up more properties in the US. They go buy up more oil, like crude oil, buy like the commodity itself. They go buy up more gold holdings. They go buy up more stock market ETFs, and they are the ones who are literally supporting the economy upside. So if they were to rise interest rates as well as taper stimulus support, that's the only way you're going to see US dollar upside to start correcting some of this downside move. But they don't want to rush that process because they don't want to stop their stock market gains. They don't want to stop their housing market gains. They don't want to stop this bull run on oil. They don't want to stop the bull run that's still pretty much active on gold, right? But anyways, you have to understand that from a macro perspective, and now you can better understand just the overall correlation. So now understanding that dollar is dominant, dollar has still broken some bullish market structure here, failed to break back above this bearish market structure retest point, and you can see we're having a technical double top. Why is dollar still bearish? Well, because we understand that the Federal Reserve is still going to keep stimulus active, right? Thank you for that, Charles. I'll check, just you guys check that on your own accord. You're going to see that it was extremely bullish in the inverse of the dollar movement. You know what I mean? But anyways, so we can see on the intraday time frames here, dollar's having a double top and still respecting some bearish market structure with the potential to break down and revisit these lows as long as we break below 92.4. Now, Japanese yen standalone volatility index, which are obviously two safe haven currencies, US dollar, Japanese yen, volatility index, which is a great fear or greed reader. VIX is still bearish, Japanese yen is still bearish, just in a range, and dollar still bearish. This means that markets are still optimistic because even though global equity markets have had a bit of a pullback, global stock markets are still extremely bullish as well across the board. So markets are still optimistic. Yes, we had a bit of a pullback on the dollar. Yes, we had a little bit of a pullback on some global stock markets, but that's normal. The market moves in waves. You have buyers entering the market at certain price points. They profit take. Sellers jump in hand. Sometimes it's a fundamental catalyst behind. It creates these dips. It creates the market waves. There's nothing out of the ordinary of that. What we want to understand is that overall market structure is still bullish on all stock markets across all regions, and fundamentally the volatility index, Japanese yen, and dollar are still bearish. That means markets are still optimistic. So when I'm coming here and looking at gold and looking at the 4-hour chart, it's going to be correlated to the dollar movement. So here's some intraday gold analysis, all right? You can see that gold has been bullish from retesting that higher time frame demand zone at 1680, which I showed you guys in the previous market update webinars on the daily and weekly time frame. From there, we've been in this bullish market structure. From this high point, we had a more aggressive pullback phase bring us all the way into this liquidity, very strong liquidity and demand zone at 1780. The same time the dollar double topped and faded out some of that strength is the same time gold is starting to create a bit of a support and consolidation zone at this level. Now, we do obviously tomorrow have some of the US CPI figures at 8:30 a.m. Eastern. We understand that if US inflation is still rising, this is going to be a bearish impacting factor on the dollar and a bullish impacting factor on gold, because investors hedge inflation risks by putting money into commodities and precious metals like gold. So we can see that higher time frame, we haven't broken bullish market structure yet. What we have had is a pullback in profit taking from this intraday high, bringing us back into this demand and potential buy zone. Just like you've had either consolidation zones, highs printed, pullback phases, and you still make your way to the upside. So When I'm looking at gold here, I'm still in a bullish bias. As long as Feds keep stimulus active, US CPI is increasing still, and dollar fades out its strength, the green boxes are buy areas where 1789 is high risk, high reward, above 1795 is medium risk, and above 1803 is the safest buys to take once we break out of the structure to start scaling up and targeting these highs again. This is a high risk, higher reward because you're pretty much anticipating that we're just going to hold the liquidity zone and fail to break, and dollar still bearish. But scared money doesn't make no money. So obviously, the longer you wait, the potential shorter range you're going to be taking advantage of it as well. But that's the nature of the beast, right? That's just how the markets work. But that's going to depend on your risk threshold. This buy path of price for gold is only going to be dependent on fail to break the 1786 lows, right? US dollar bearish, US CPI increasing, Fed stimulus stays active. And then if you have these confirms or any of these confirms alongside the technicals, then I'm still in a buyer bias on gold. High risk, high reward buys at the 1789 higher time frame key level. Medium risk buys if we have a pullback, then break above 1795. Safest buys if we break above 1803. This is going to be only if dollar also turns bearish. And if you have these confirms as well, you can take advantage of that. I'm only looking for gold sells if we could break that liquidity zone to the left and break below 1781. My main bias is still buys, but obviously we are manual retail traders. We're not fortune tellers. We use technicals, fundamentals, price action, economics to our advantage, but we're not always going to be quote unquote right with our analysis. But that doesn't mean that we can't take advantage of trade ideas as long as they're pre-planned and we can have a checklist of confirms. So I'm only looking for gold sells break below 1781 liquidity zone, US dollar strong, US CPI decrease. Because that shows us inflation is dropping. If dollar still keeps picking up strength, we break below this liquidity zone and that zone to the left, we still continue to respect some of this corrective structure, and you break below 1781, then gold sells. But this is going to be primarily the best correlation to watch is going to be our dollar movement. For example, you're going to understand that for when you're watching the price movement here, that if dollar starts to make his way back down to the bearish side and come down to 92 and continue to soften, that it shows us markets are still relatively optimistic, and that's in the sense that everything that's been supported by the dollar is going to continue back bullish. So we can anticipate if dollar continues bearish, breaks below 92.4 and starts to make its way to revisit these lows again, every single pair against the dollar is going to continue up, stock market's going to continue up, US stock market, oil's going to continue bullish, gold's going to continue bullish, Bitcoin's going to continue a bit more bullish in the short-term time frames as well. Right? So if dollar fades out that strength and continues bearish and goes back down to revisit 92 flat, and let's just say you don't want to take the high risk, high reward buys, as soon as you start noticing dollar bearish and gold breaking above 1795 or 1803, then you know that fundamental, that macro fundamental is still very much active, and you can take advantage of that. No, US consumer inflation increasing currently has not been a healthy, like for example, Chris, that's a good question. During regular economic conditions, when you're watching month-over-month CPI data and you're seeing fluctuations in consumer price and you see some short-term increases, that can be healthy and good for the economy as long as consumer activity is still high. So pretty much if consumer inflation is increasing, it means in the short term that cost of goods will also increase for consumers. But in normal economic conditions, if people are earning enough money, they're working enough, and consumer activity is still high, pretty much talking about retail sales, then you can have healthy increases in inflation, right? But the increases in inflation we've seen the last year and a half have not been healthy. They've been artificial due to the pumping of the economy by the Federal Reserve. So we are actually coming to inflation risk levels during the pandemic. The massive increases in US inflation in the economy over the last year and a half have not been due to a natural organic reason. Do you understand what I'm saying? It's been due to the Federal Reserve increasing the US money supply and literally pumping the markets, giving stimulus to people, and you're having an artificial transitory increase in inflation that's literally being produced by the feds. Right? The Fed has been pumping since 2008, but we saw an exponential increase in the US money supply obviously in 2020 as well. So both good points there. But so the inflation anyways, the reason why that if US inflation is still increasing, it shows us that it's not a healthy increase in inflation. It shows us that we're reaching high inflation levels, and investors hedge inflation risks by pooling into commodities, pooling into gold. Okay? Anyway, so does that make sense for the gold analysis? We're at a very key decision point. My bias is still buys. High risk, high reward at 1789. Medium risk break above 1795. Safest buys above 1803, with the fundamental confirms of US dollar bearish, US inflation still increasing, Fed still keeping stimulus relatively active, and no talks about tapering or interest rate hikes. And then having those technical confirms as well. I would only adapt to gold sells if we have these confirms. Now, the analysis I just gave you guys on gold, you're going to see it's going to be the same analysis on GBP USD as well as Euro USD or AUD USD or NZD USD, anything against the dollar. This analysis is going to be exactly the same, except we're going to be adapting to the current price points of interest on those pairs and those price points. So keep this in mind. These fundamental confirms for buys on gold or sells on gold is actually going to be very similar to the structure or setup that we're potentially looking for here on Euro USD. Okay? I don't use Forex Factory. I have a Reuters Icon news terminal. That's what you see this news headlines to the left. That's for the private channel members and myself. I don't use Forex Factory. That's for noobs. No, I'm just kidding. You guys can obviously use all these resources. I used to use everything I could back in the day, 5 years ago, 3 years ago, Twitter feeds, everything. Fucking noobs. You guys use Forex Factory? No, I'm just kidding. But anyways, Euro USD. The key make or break decision point for me on the intraday time frames is this medium term zone at 1.176. But when you look at Euro USD on the daily time frame, or you look at GBP USD, it's still bullish. We just had a pullback from those highs, but we're still maintaining this bullish market structure. We haven't broken below these price points since freaking since May time, right? Okay, and we've had very strong reactions from this area as well. So you can see here, we're having a little bit of a pullback from these intraday highs, but we're still bullish, very strong bullish price action. We're just having a pullback from these high points. So pretty much on Euro USD, 1.176, I'm still seeing as a buy area, high risk, high reward buy area. Safer buys if we hold above 1.18, safest buys above 1.84. Because don't forget, double bottom at the previous lows and medium term zone on a daily. This is a daily zone. And what you're looking to target is back up to the 1.19 intraday and daily highs. If we have that continued dollar weakness, this pathway of price need US dollar weakness when observing Dixie, equities, Euro stocks / German bullish, weak US data. Okay? Because you can see here, German and global equities, if you look at Euro stock, I just look at German stock market as an example of how investor confidence is within the Euro markets. Pretty much all global stock markets are still bullish. They're just hovering at their all-time highs. They've been in a bit of a range. They've done a bit of a dip, but that's just the market waves. You have profit-taking, pullbacks, sellers push price down to better demand areas, buyers jump back in, and you continue up the trend with the support of the central banks, right? So Euro USD, this is still my main bias. I would only be looking for sells if we had clean breaks below 1.176 as a make or break area, or if we broke below 1.172 with dollar strength. And I need global stock. I need the inverse of this fundamentally. But this is my main bias. This is what I would adapt to if dollar continues bullish. I don't see dollar continuing bullish because I don't see the Federal Reserve wanting to stop the greed train and money train they got going on the stock market. I don't see them wanting to stop the money train they got going in the US housing market, on oil, on gold. I don't think they want to stop that anytime soon. And it's going to be a very slow, steady tapering process compared to how they stimulated the economy. Because remember, from a psychological perspective, when they stimulated the economy, who got fucked? Not them. The middle class, the working class, the poor get fucked. They're the ones who lose their job during a time of crisis. They're the ones who have to deal with the increases in inflation and the increase in cost of goods. They're the one who have to deal with all the panic, uncertainty, and fear within the media and within the world. But for the rich, every single crisis within history has become opportunity for the rich. And when the Federal Reserve, the reason why they were so aggressive with stimulus is because they were willing to sacrifice the weakness in the US dollar in the short term to pump up the stock markets, pump up the housing market, because it makes them even richer. It supports corporate America, it supports the one percenters. So if that process of them providing stimulus has been making them richer and richer, psychologically, if you were in their shoes, why would you want this greed train to stop? The US is not going to be going back into lockdown. It's not going to happen. There's not going to be really any economic crisis or uncertainty that's going to mimic or be as high impacting as the initial pandemic. Do you understand? So the Federal Reserve is going to be very slow with their tapering process. They're going to be very slow when they're looking to rise interest rates because they want to keep their stock market gains chugging and chugging away as much as they can. They want to keep the housing market prices chugging as much as they can before when they start to even look at rising rates or tapering, that's when the whales are going to cash out. Then you're not going to see a crash in the markets, you're going to see a correction. Dow Jones, for example, might have a 3,000 to 5,000 point correction. The U.S. housing market and housing markets might drop $100 to $2,000 on an individual house price for houses that are in the millions of dollars. Oil might have that $10, $20 correction and then again continue right back bullish as every economic crisis follows the same pattern. Right? So if you were a part of the feds, if you were a one percenter, if you were one of these whales that have been riding the stock market buys from the bottom, you wouldn't be saying, oh, we're hitting a top. It's going to come crash. Oh, we need a correction. No, you're going to say, fucking keep chugging this shit away. Right? So you have to think in their eyes. You have to think in their shoes. We're playing their game. We're not playing, you might think you're playing a game you want to play. No, you're playing their game. They make the rules. They move the markets. You literally saw them artificially pump everything against the dollar for the last year and a half. That's the power they have. You don't fight that. Okay? But anyways, as long as US dollar remains weak and continues bearish, we're going to take advantage of this. I'm only selling below the red box price points to the left if we have the inverse of these fundamental confirms. Now, the interesting thing is Euro USD is lagging a bit behind GBP USD because last week we had the ECB sentiment, which caused a bit of whipsaw and indecision as we had some price setups. We had the Euro Central Bank interest rate decision. GBP USD here, you can see already sort of did a step ahead where it did this pullback phase, and then we've already on that dollar weakness and UK equity still being hot and GBP still being hot. We already had that upside play back to revisit these highs, right? So GBP USD is showing us a bit more bullish market structure, and it looks like Euro USD is still just in this pullback phase here. Like for example, if I was to zoom out, Euro USD is pretty much sitting like this. It just had a bit of an extra deeper pullback, but it's still following the same fundamentals, same technicals. It seems like that upside play is just lagging a bit more behind, and that was more due to the European Central Bank interest rate decision price grab, right? But in my opinion, within the next week, if dollar remains bearish, Euro USD is going to take this same little pathway of price and go back up to revisit these intraday highs and break out of this pullback phase there. Right? So we're still looking for that on GBP USD, but on Euro USD, but on GBP USD, I'm actually looking for more adapting to these price points of interest. 1.38, 1.384 where we are now, and buys above 1.39, previous highs being the safest. Same fundamental confirms. We need US dollar bearish. We also need UK equities to continue bullish. It's also good confirms if we see GBP trending bullish against other safe haven currencies like the yen, which it has been. And this would 1.38 would be a high risk, high reward buy area. Above 1.384 breakout is a medium risk. The safest buys is if we clear previous highs. And obviously this is if dollar continues its path down bearish here to revisit these lows. We have so many confirms then to start riding back EU buys, AU buys, Euro USD buys, GBP USD buys, and UCAD sells. And also if we see the same time dollars continue bearish, we have higher expectations that US stock market will continue bullish, but also the same dip across the board here will get bought up and stock markets will just continue back, chugging to their highs like they have been for the last year and a half. Middle Eastern tensions aren't really impacting financial markets. Biden brought a little bit of tensions here and there, not really doing too much. We don't have really anything going on in terms of trade wars or economic volatility. It's more primarily been focused on central bank policy positioning. When are they going to taper? When are they going to raise interest rates? Are they going to keep stimulus active? If they keep stimulus active and they're very slow on tapering, which I expect, stock markets are going to keep chugging bullish. Dollar is going to continue bearish, right? US 30, I'm still looking for retest high risk, high reward buys at 34,600. Buys above 35K, buys above 35,200. We failed to break that previous low, bounce off the higher time frame key level as well. I think I gave GBP USD we just gave here, right? Yeah, GBP USD, I'd only be looking for sells with dollar strength, and if all global stock markets have a decline and we break the bullish structure and break below this last price sensitivity area that took us into highs, and it's very similar to like the gold analysis, Euro USD analysis, we would need that dollar strength. We would need the break below 1.374. You guys have to understand, for example, KC, I understand what you're trying to say. UK sending warships to South China. China warns. Can this correlate with GBP ranging? No. there's going to be a lot of various headlines that you're going to see within the overall globe with social politics, geopolitics, economic politics, and so forth. But not every single economic headline actually has an impact on the financial markets or is going to shift what we're watching in front of us now. You might have them cause some short-term little whipsaws of price here and there, but the primary focus is central bank policy positioning. That's what's keeping the markets up. That's what we're going to be focusing on. That's who's been controlling the markets for the last year and a half. Okay? So trade ideas given on gold, GU, Euro USD, US 30 as well. GJ, we're still bullish on the higher time frames on GJ. Remember, our safe haven currencies are still relatively bearish. Dollar's bearish, Japanese yen is bearish, volatility index is still flat. UK stock markets are still holding that strength, showing me investor confidence within the UK economy and markets is still relatively high, right? Super Data Wolf, get out of my stream. I see you on Iron Man streams. Never come in here, you stream whore, hopping bitch. Get out of here, bro. Get out of here. Sorry, yo. I don't like people who watch Iron Man streams. Clay, you guys know Clay Hall? That guy is a fucking crackhead, meth-selling loser from Idaho. So he abuses his kids. He abuses his family. He scams people. He does crack in his shed. He sells crack out of his shed. I don't trust him. I don't like him. 18 years trading penny lots. I don't like it. All right? So if I see anybody that I see in his streams, don't come watch my streams. Go stick to him. Go learn with Iron Man. Okay? So gold trade ideas given. GU trade ideas given. Euro USD trade ideas given. US 30 as well. Let's go to UCAD before we go to GJ. UCAD, I'm looking for sells below 1.264 and sells below 1.258 as long as dollar continues bearish, because then you have a double whammy on USD CAD. If dollar continues bearish, you have obviously weakness in the US dollar, but you also have a higher probability of oil continuing bullish with the market optimism. There's a fundamental correlation between Canadian dollar strength and oil strength. One of Canada's main revenue sources is the exportation of oil. So whenever crude oil is higher price per barrel, this is anticipated as more revenue coming in for Canada and a stronger Canadian dollar in the short term, right? The first sell is because I've been watching this little order block in medium term zone here, and we took advantage of this sell last week as well, and we're getting a potential double top and same movement as dollar index. So pretty much if I see when I'm coming back to look at the dollar index, if dollar starts to make its way back down to these lows and break above here, and oil continues bullish, very easy USD CAD sells below this medium term zone at 264 area. Sells below this area, sells below 258. This is as long as dollar index is bearish, Canadian equities continue bullish, oil is bullish, plus breaks below these technical price points. Very nice sells to take on UCAD. We're getting some nice exhaustion at a higher time frame key level, failing to break that price sensitivity area to the left. Dollar's not manipulated. You're just a retard. Dollar's been having some very, very clean cut movement. The charts show what the Feds have been doing to the US dollar. The chart doesn't come before the Federal Reserve. The Federal Reserve comes before the chart. Fucking idiots, man. The chart is literally a technical innovation for us retail traders to observe and plot the price points of movement, right? It's actual order flow and decision points behind the scenes from the central banks, from the market makers that create the movement in price. It's not the other way around. So if you could open up your brain a little bit and go learn what an interest rate is, or how it impacts the money, then you could have more of an advantage than just trying to see what only the charts are telling you. You can know what the real world economy is telling you. You can know what the charts are telling you as well. Therefore, it's manipulated based on their contracts. Just because you said contracts, you're trying to sound smart. That's not how it works. You're thinking, you don't know how their game works. You don't like you don't you want to see how fast you want to see how fast they're you don't understand how this is working. Exactly. So you can't speak on it and say, hey, it's manipulation or it's this. Only very ignorant retail traders who are constantly losing blame the market for manipulation. That's just a very ignorant mindset because you're too scared to go out of your comfort zone and learn about economics because it's very overwhelming. Or you're too scared to learn about fundamentals. Or you're too scared to go learn about what actually impacts the charts because it can be overwhelming. You know what I mean? So you just gotta open up your eyes, man. Nobody's trading like this. Nobody's trading these banks constantly from various locations, various banks, various contributors, updating price, contracts, like you said, contracts. It's all automated. It's all algorithmic based. It's going off every fucking millisecond, less than a millisecond. We focus on the information we can use to our advantage. All right? If you want me to explain further, then guess what? You have a gold mine at your fingertips. For example, you're talking about US dollar movement being manipulated, right? Well, if you come to this webinar right here, you can get a full breakdown of what the dollar did and why it has been moving that way because of the economics behind it. You can get a full breakdown, pandemic and central bank timeline and analysis. You know what I mean? So it's not like I'm knocking you down or saying, hey, fuck you, go fuck yourself. What about repos? Do you even know what a reverse repo is? Or you just keep trying to say different things to sound smart in the chat quickly? Go watch the webinars. Go watch the webinars. Repo is basically reverse QE. You probably don't even, you have to know what quantitative easing is first. All right, go watch the webinars. If you guys want to learn about all these different concepts, don't forget all these various webinars for free at your fingertips. You can't learn about repos if you don't even know what quantitative easing is or credit allocation. You gotta go learn about that stuff, right? Okay, so yeah, a bunch of webinars on the Capital Hungry Twitter as well. But last but not least, GJ. Yeah, there's over 100 webinars on the Capital Hungry page from like the last year. Psychology, scalping, Dow Jones analysis. Like we were calling Dow Jones buys here. Look at this. Can't fight the feds. Keep buying every single dip. It's everything you want to learn about. Look, we called the stock market buys from 27K all the way up to 30K. With the same reasons I'm telling you guys today to this day. You know what I mean? So you have tons of webinars. Greatest transfer of wealth, crude oil, central banking, fundamentals, technicals, GJ timeline, gold, scalping sessions, psychology sessions, risk management, live trading sessions, 4 hours long live trading sessions, market update webinars, individual pair breakdowns, crypto analysis, society rants on everybody being a fucking retard and not using this information. Look at this. Roast about Daniel Savage. Everything. Everything. YouTube shorts for quick little 1 minute updates on the markets. Pandemic timelines. Scalping sessions. Fucking me motivating you to go to the gym. Just yelling at you. This is a 12-second clip of me yelling. You know what I mean? So I'm not knocking anybody down. I just want you to understand your brain, your potential, is no different than mine. Your access to resources, your access to information is no different than mine. It's just about how you use your time and effort. And the reason why people respect the information I give, the analysis I give, and people even pay for the analysis in the private channel, or why I have found a bit of success with trading, is not because I'm a genius. It's not because I have some photographic memory. It's not because you know what I mean? It's not for any special reason or any secret. It's because of all of this time and effort. If you go to the Capital Hungry Free Analysis channel, before I had any paid service, before anything, you could come here and see me grinding from penny lots. 2019, we're almost at 2022, looking at the same things. Penny lots back in the day, making $1,000 in the week. You know what I mean? Looking at the same things I'm telling you guys today, but I didn't have the same resources. I didn't even have a news terminal back then. We were just going to websites, right? Looking at fundamentals, technicals, doing analysis and so forth. Showing my trades, my process, penny lots, everything in between, to nowadays, you could come and see. Oh, that was just that's a pretty big flex. Nowadays, I don't trade penny lots, but it's the same process. Now, I might not be making hundreds of thousands or thousands of dollars, but hey, $5,000 in a singular trade within an hour. Or if you come here and look at the media on like when I show my monthly profits and stuff like that. So many freaking pictures, man. Should I scroll too far? Whatever, it'll still be here somewhere. You can still see. That's not mine. $2,000. Right? Full slip here. $12,000 live account in a singular day. Here, $18,000 wins and losses. You can see the live accounts, live tags. I show the entire trading slip and shit, so you can see the wins, you can see the losses. Everybody, no, I'm not trying to show this off, right? I'm not showing this off. Here you can see $18,000, just one singular gold trade. Live account, everything of that, the entries. I'm not trying to show this off. I'm trying to say that everybody looks at all the information I have now. Everybody looks at the money I might be making now as it's something crazy, but nobody realizes all of this. Nobody realizes these days, the grinding days. So what I'm trying to tell you is, go put in the time and effort and actually fulfill your potential. You know what I mean? Stop wasting your potential. You got the same brain as me. We all have the same brains. Unless you actually have some retardation, then that's a medical illness. You know, I can't really help with that. Can't help if you're actually retarded. Anyways, GJ has been in a bit of a messier range here, but we're still bullish on GJ as long as Japanese yen stays flat. Green boxes are the buy areas. All right, if we get a pullback to 151.8, still buys. 152 still buys. Breakout above 152.5 still buys. I'm still in a, even though we've been ranging here, we've still been continuously chugging to the upside, still been maintaining bullish market structure. We still have Japanese yen bearish, and we still have the equity markets still staying bullish, as well as we had stronger UK PMI data last week as well. So if we were to break below here, I'd still be looking for buys in this area. Pullback buys, breakout above 152.5 buys. I would only sell GJ below 151.5. Now, I don't want to make these webinars too long. It's almost been an hour right now. This is supposed to be a market update and trade ideas webinar. For anybody who came late, I'm about to end this, but it's not like we were live trading here. I'm just giving analysis of the trades I'd be looking for and that I'd be giving out to people as well. Within the private channel on the intraday time frames for day trades or even scalps on gold, GJ, GU, Euro USD, USD CAD, and US 30. We also gave a full breakdown on the dollar, economic events, and market sentiment. All right. So thank you guys for coming and watching. If you missed the analysis on the other pairs, don't worry. This is going to be on the YouTube in probably 10 minutes after I end it, and you can rewatch it from the very start and get all the different trade ideas that I'm personally looking for. All right. So, all right, everybody. Thank you for attending the Capital Hungry Monday Market Update webinar. Just a quickie. I like to make these pretty quick. Next time I'll see you guys will be Wednesday morning, 7 a.m. Eastern for the New York scalping session stream. I'm also probably going to be coming on Raja's stream during one of the mornings this week as well. Thank you all. Thank you for attending. Thank you for providing your support, watching me, giving me some company. Make sure you guys rewatch this, like, subscribe. It's not paid. It's just a private member and private channel made it. So you have to message him. Carlos in the private channel, he made it. It's not like, it's just locked, I think, by him. So pretty much we went through fundamental points. We went through price action, movement, and overall macro sentiment on the dollar, Japanese yen, volatility index, global equities. We understand what economic events we have. Obviously, we have the jobs data that's going to be impacting GBP, and we want to make sure we also have that good UK jobs data to show us continued economic rebound and continued upside. Otherwise, the focus is on US CPI, inflation figures, 8:30 a.m. Eastern tomorrow. And we gave out analysis and trade ideas on gold, GU, Euro USD, USD CAD, US 30, and GJ. All right, so I'll see you guys all Wednesday morning if you're going to be here for the New York scalping session. Everybody take care and have a good one.